Hello and welcome to today's Fat Tail Daily video. Today I'm joined by former geologist James Cooper. Welcome, James.
Thanks, Woody. Good to be back again.
Yeah, good to see you. And it's timely too because there have been some huge falls in the iron ore price, and that's the exact topic that you've been talking about today. So I've got a couple of questions on your piece. It's to do with China. It's to do with the iron ore price and potentially what their agenda is. But what's happened overnight? Right, what they just to give people a bit of context. It's been a huge 8% fall in the iron ore price. Can you tell us what's going on and why it's significant?
Yeah, so iron ore prices fell heavily overnight, as you say, 8% or almost 8%. And for iron ore, that's a really big move. I guess one of the concerns here is iron ore was holding around $100 per tonne for quite some time. And that was a really key sort of psychological barrier for investors and traders, this $100 per tonne US per tonne level.
Yeah.
So that's broken overnight. So that's causing a bit of concern in the market. Interestingly, though, a lot of Australia's iron ore plays are actually up. So Fortescue is up this morning, the same for BHP. So it's difficult to understand why. Maybe it's maybe the correction in these stocks has been quite severe already, and market observers have seen that these stocks have sold off heavily enough in response to the declining iron ore prices. So we'll just wait and see what happens with the stocks and iron ore from here.
Yeah. Well, I've got some questions on the stocks coming up, but in your Fat Tail Daily piece today, very insightful, I must say. You do talk about a project, the Simandou project in West Africa. And you suggest that project on global iron ore supply might be overblown. Maybe you want to just give people the significance of that project, why it has an effect on supply and demand dynamics. And after you give that context, I was going to ask you how do you think this perception is affecting sentiment towards Australian iron ore companies, and do you see any potential opportunities arising from that misalignment?
Yeah, no, it's a good question. So I think sentiment right now is probably at an all-time low for the resource market. And that's probably the lowest it's been perhaps since even the pandemic lows back in 2022. So it's a market which I think does present opportunities, but you really have to dig in and see where those opportunities could come from. So speaking of Simandou, so the iron ore project, big iron ore project, for listeners that aren't familiar, that's in West Africa in a country called Guinea. This project has been in the pipeline for decades, with Rio Tinto looking to get it into production. But it's really been sitting idle. But as of about a month ago, Rio Tinto basically said this project is going ahead and first production is set to start in 2025. So really for iron ore, that's further bad news, because that's putting more supply on the market in a market that's already feeling pretty depressed given everything that's happening in China. So trying to find opportunities in this sort of bearish outlook is difficult for investors, but I think we'll tap into a few of those in a moment.
Yeah, I want to bring in China too, because I know they're quite a significant part of this story. But just quickly, like you mentioned, bearish sentiment in the resources sector. Yet I know another marker that you look for our readers is M&A activity, and there seems to be a lot of buyout activity, takeovers. Is that suggestive of a bear market, or is that more suggestive of a period in the cycle that's, I don't know, like what does that tell you? Does it tell you that exciting things are coming up and that you should be moving in now, or?
Yeah, so I think M&A activity earlier this year was really centered around copper. That was when copper prices were stronger. The outlook was pretty strong, even though housing starts in China, which is a key driver of iron ore and copper prices and just broader sentiment, even though that wasn't strong and it's still not strong today, I think the supply issue with copper has just been this long-term theme, which will, I think, persist throughout the sort of bearish narrative we're seeing with China. It's really kind of giving the market that key support level when you've got this lack of supply, even though we're waiting for a strong demand driver. And I think ultimately that will come with some kind of targeted stimulus package from China. And I guess just on that, with looking at some of the opportunities, what would be surprising is the import data from China. So this is what I sort of spell out in the article is probably the key metric to watch right now is just the volumes of iron ore being imported into China. So we'll get the official data out next week. Those numbers will be released. There was a commodity firm that put out some initial results, just estimates, so they're not confirmed yet. But those results are actually really promising. So the highest imports for August since January 2024. So that's really in defiance of all the bearish activity that's happening in the market with iron ore imports. So then, I guess, why would China be importing record volumes of iron ore at a time when the mainstream narrative is really bearish on manufacturing and new housing starts? And I guess that's the key question to ask that probably won't become apparent till maybe later in the year.
Yeah, it's very difficult to read, isn't it? And you actually do highlight in your piece that China's history of manipulating commodity prices. How do you think that strategy might evolve in the years ahead, especially given the growing global scrutiny of China's economic practices?
Yeah, so I guess it's China, which is a major, or the world's most important buyer of iron ore. So I think 75%.
Yeah.
Of imports and a major buyer of copper and other industrial metals. And you've got to put yourself in China's shoes. So as a key buyer of all these metals, obviously China's going to want to pay the lowest price it can, and it will do all it can to achieve that outcome. So one of the things it's done recently, just talking about the sort of price manipulation,
Yeah.
which could be underway. We don't know.
No, you've got to kind of read between the lines, haven't you?
Yeah. So there was what really drove this initial wave of selling in the iron ore market was steel output cuts from the big steel production firms in China, and this drove the first wave of selling. And it's important to remember that these are all Chinese firms, so they work closely with the CP, the Chinese Communist Party. So whether China is colluding with these firms to sort of help drive down prices, that I think would be confirmed if we see really strong import numbers for iron ore, which will come out next week. And the early data for that looks actually that it could be from this commodity firm. So that's a promising outlook. I think if we look longer term, as long as China is importing a lot of iron ore, that's a good sign for resource stocks broadly, I think.
Gotcha. So can I just ask, so one obviously the big emphasis is on the importance of watching the import data, but are there any other indicators that investors should be monitoring to get a more complete picture of the iron ore market's health and what it means for the wider resources sector?
Yeah, so I guess as a former geologist, I also like to use charts as one of the sort of, I guess, forward-looking ways that you can kind of get a gauge on the market. I think seeing the response to companies like FMG who are actually up today, that's a good sign. So I think watching the stock prices, seeing if they're putting in a major low and perhaps maybe consolidating around these lows, that would give us some confidence that we could be close to a low in the market. I don't think we're there yet. I think just the fact that iron ore fell pretty sharply overnight through that key $100 per tonne level. I think if we were looking for sort of a long-term base, it could be as low as $80 per tonne. That was the low from the COVID pandemic. So I think anywhere between $80 to $100 would probably be a sort of long-term price point, or that iron ore would probably trend for some time. And then just seeing how stocks like BHP and FMG react to sort of news events from China. If the reaction is less severe, that would tell you that perhaps the market has already priced in a lot of the bad news.
Right, and are there any particular, just to end the chat, are there any particular companies or subsectors within the iron ore industry that you think are well positioned to navigate those kind of challenges or present opportunities to investors? Because like you say, if that outlook is priced in, I guess it would pay to be ahead of that move, right?
Yeah, so I detailed in a recent update to diggers and drillers readers that I think with perhaps softer iron ore prices, we may not see the record prices that we saw from a couple of years ago. With that said, I don't think we're going to see a major falls that a lot of people predict in the market right now. So I think if we see a more stable base between sort of $80 to $100 per tonne, I think that's where you really want to look at high-grade producers. In Australia, that's BHP, which is just put out its data and confirmed it's the highest grade producer in Australia. In terms of smaller plays, which we tend to look at with diggers and drillers, there are some opportunities out there. We actually hold one stock called Phoenix. I'm happy to let listeners know that it's been in our portfolio for a little while. This company just has the advantage of being a relatively high grade or holding relatively high grade deposits in the Midwest of WA. It also has really good access to some port infrastructure in Geraldton. So I think looking for these companies which can operate on stronger margins, which would be the key for slightly softer iron ore prices moving forward.
Gotcha. And final question, I promise. Any site visits planned anytime soon?
I have actually got a couple. I was in a meeting with the MD last night. I will keep that under wraps till that's confirmed for that site visit, and we actually got one planned later this month, I think.
Yeah,
so
cool.
A couple in the works, and we'll certainly put out some videos and some details on those site visits once we've done.
Good stuff, James. I'll just say that it's great to have someone like yourself on board, because a lot of analysts don't really understand rocks when it comes to resource stocks and the actual product that companies are digging out the ground, right? So it's a big advantage.
Absolutely. I haven't really touched on the rocks much today, but I guess it's been more of a big sort of macro China theme.
Yeah.
But maybe in future we can do some more dig into the geology and into the weeds of some of the companies.
Good stuff. If you enjoyed today's chat, give us a subscribe on YouTube. And if you are looking to get James's insights, every Thursday you publish your piece in Fat Tail Daily. It's absolutely free. Go to the website. I'll provide a link to James's piece today. It's very insightful. And if you want more of that, just sign up to Fat Tail Daily. It's completely free. So thanks for your time, James, and thank you for watching.
Thanks very much, Woody.